We Hi guys, we are not enabling the participants to start the video, right?
Video is fine. We are not letting them unmute themselves.
Okay, fine.
Archana, we are good to go.
Yeah. Shall we start? Hi, everyone. A very, very warm welcome to all of you. We're a part of the ISB Alumni Association Bangalore chapter. My name is Archana Rao. I'm the president of the Bangalore chapter, and I'm very happy to invite you all over for the blockchain and cryptocurrency session and a panel discussion. I would like to introduce the panel. If we can start with Raj Sharma first. Raj is the former head of partner ecosystems at DLT Ledgers. Raj, would you like to introduce yourself?
Yes, thanks. It's great to be at this ISB event, and thanks for the invite, Akand and Vignesh. And a little bit about my background. I started off in management consulting and then several startups. First in the area of supply chain, then services, and most recently at DLT Ledgers, which is in the blockchain space. And I find that my background in enterprise software and supply chains dovetails really well with with trying to optimize financial flows using blockchain technology. So I'm just going to share a few slides, a little bit more about what we're trying to do here, and set the tone for the panel discussion. So if blockchain is the answer, are you able to see my slides? Yeah, okay. So if blockchain is the answer, really, what is the question? It's all about trying to answer how do we move value peer-to-peer without a trusted intermediary, right? And we have to thank this pseudonymous character called Satoshi Nakamoto for coming up with the concept of Bitcoin. Initially, 13 years ago in the greater Boston area, somebody actually used 20,000 Bitcoins to order pizza. One can only figure out how many millions that would be in today's value. The basic principle is all about distributed consensus. How do we go about enhancing trust, ensuring transactions in an increasingly untrustworthy world? And the idea is all about verifiably moving value or data on decentralized networks, and that actually really goes to the heart of the plumbing of the world of finance and money. So what we've done at DLT Ledgers is essentially take a look at Hyperledger Fabric as a permission protocol and build a whole platform around the whole idea of trying to streamline the execution of trade amongst all its various stakeholders. So you'd have wholesale commercial banks, buyers, suppliers, traders, logistic intermediaries, and what have you. Just a couple of examples on this. Here you see AgroCorp, the customer of DBS Bank. We're helping them aggregate supply using a mobile app that is actually blockchain. So the farmer that they're trying to source from is actually able to see real-time pricing updates. They're able to bid and offer and actually track any scheduled deliveries. And so while the physical movement happens from the farmer to a port and it moves from Australia to China, we're actually able to track real-time any of the financial touch points in the farmer's bank, the trader's bank in Australia, DBS who's financing the trade, and of course the Chinese bank on the other side of the trade. Here's another example. it's a complex trade flow. This is a publicly backed, actually a public tender backed by a DFI. It's the first African DFI that's been on our platform. And essentially, these are large trades, won by tender and essentially LC backed. And what you see is that the DFI is underwriting the risk of the trade, right? These could be anywhere between $250 to $500 million. And fertilizer is moving from Morocco around Africa all the way to Ethiopia. And the key point here is look at the complexity. You have a single contract, single smart contract, multiple flavors of, in this case, fertilizer, multiple shipments and multiple LCs, all being tracked on the DLT Ledgers platform today. There have been blow-ups that happen every now and then in the commodity space. Earlier last year, there's a huge blow-up in Singapore with Hin Leong, the energy trader. About $5 billion of capital just went poof, up in smoke. And a lot of the banks who financed them were based out of Singapore, and they lost. They were able to collect maybe cents on every dollar. So the fundamental challenge that came through a couple of banks that we've been working with, DBS and StanChart, was what can blockchain be used to minimize the risk of duplicate financing, right? And so we got together with a consortium of banks that helped to design and productize this as a pilot with the backing of the Singapore state, Enterprise Singapore leading this initiative. We able to essentially give every bank a node and around runtime run a check of any document being offered to the bank for financing. And we create a whole color-coded schema that allowed a bank to understand whether it had been financed before, it was red. If it hadn't been financed and they could go ahead with it was green. And of course, an amber if this needs to be furtherly, checked by the bank for potential capital approval. So if you look at the broad space of use cases around blockchain and crypto, we have payment systems, Master and Visa probably leading the way in filing most number of international patents in the blockchain space. CBDCs and stable tokens, which should form a large part of a discussion today on this panel. Obviously, we have secondary market trading, and our panelist here from CoinDCX can talk all about that with some of the recent good news. VCs for funding ICOs, and as well as sovereign wealth funds that are getting involved in the space, and not in a small way. And of course, insurance of late, if you've noticed, Allianz, that's headquartered in Europe, has started actually processing all its auto claims that are in between the different Eurozone countries using blockchain. About 18 different countries have signed up. So really, if you see blockchain and crypto, I say is stuff it's here, it's now, and it can only evolve and get stronger with time. Thank you. Over to you, Minal.
Let me go through the rest of the introductions quickly, Raj. So we have Arjun Kalsy, VP of Growth at Polygon. We have Minal Thukral, Exec VP of Growth and Strategy at CoinDCX. And we have Akand Sitra, Business Strategy from TRN Labs. Yeah. Minal, would you be taking it over?
Sure. Thanks a lot. It's a pleasure to be here. Always excited to talk about crypto and blockchain and sort of share my experience and knowledge, something which is very close to me, and something which is, I'm quite passionate about. So let me sort of start with a quick introduction about myself, and then maybe I can elaborate a bit more in terms of what we do at CoinDCX. So I've been myself an entrepreneur for almost, in some capacity, a decade now. Have been quite active in the Indian startup space for about a decade. I think it all started when Bhavesh Agrawal at the entrepreneurship cell, which I was part of at IIT Bombay, came in and gave a keynote on. And since then, I've been quite excited about entrepreneurship. I have been part of multiple founding teams. Towards sort of the 2017-18, I was also working in the investment space, where I was trying to essentially help angel companies looking to raise angel money or seed money, essentially via a platform. And that's where I was when I was managing multiple sectors, fintech, SaaS, healthcare, etc. I hopped upon blockchain as a technology while we were evaluating a couple of technology companies based on blockchain. To be honest, not being technologies, it took me a while to understand the core technology, and the potential of it. But when I sort of sat down and spent a couple of months to sort of go through it, I realized that we are essentially in a space where potentially blockchain can, in the long run, do two things. One is it can essentially fundamentally disrupt the entire global financial ecosystem, by which I mean the way we store value, the way we transfer value is fundamentally changing as we speak. And second, with the advent of Ethereum, there was again a promise of a new internet, wherein you are building a Web3, which is again more decentralized, more user focused, and you can essentially convert any business logic, into a smart contract, and you can essentially decentralize the entire trust layer that is very important in any kind of trade that we do today. And since then, I've been active in the crypto space. It's been about 3 years. I've been with CoinDCX for about last 2.5 years. I am heading growth and strategy for them. At CoinDCX, this is something which is again very close to my initial days of crypto, wherein it was, if you go back in 17, 18, it was very difficult to purchase cryptocurrencies, right? Or sort of go about the entire user experience of dealing with cryptocurrencies. And that's where we saw a problem. And we thought that it is important that, we make cryptocurrencies more accessible to Indians. And which is where today we are on a mission to provide crypto-based financial services across India and maybe potentially globally in the global world moving forward, by making it accessible and potentially take it to 50 million, 100 million people in the near future. At CoinDCX, we are primarily into businesses. So if you look at the entire crypto space beyond the technology, we have 2 exchange layers, very similar to how we have all the equities trading on NSE, BSE, and multiple stockbrokers. We have a crypto INR ecosystem, which is where you have local exchanges. Crypto INR, you have CoinDCX for Xerex. Crypto USD, you have Coinbase. Crypto Euro, you have Kraken, and so on and so forth. And we are today one of the India's sort of largest and safest exchanges when it comes to trading and investing cryptocurrencies with INR. And beyond that, we are also a sort of a full stack solution in crypto if you look at us. So the other exchange layer in crypto is essentially crypto to crypto, where you are essentially all the trading and the investing is essentially happening in fundamentally Bitcoin-based markets, Ethereum-based markets, which is where you have the likes of all these global exchanges like Binance, UB, etc. Right? In that space, we are more like a liquidity aggregator. So we partner with global exchanges like Binance, UB, Coinbase, all these are our partners. And we provide a full stack solution offering all crypto financial instruments all the way from spot trading, margin trading, futures trading, and even lending, borrowing, along with more passive income opportunities like staking in a very simple to use full stack solution. Yeah, so that's what we are. And yeah, as I said, on a mission to sort of, take cryptocurrencies to everyone.
Thank you so much, Minal. I'm sure you're going to have a lot of questions once we move on to the panel discussion. Arjun, can I please invite you for a little bit more deeper introduction and your opinions?
Sure thing. Thank you. Thank you so much for having me. Yeah, of course, always great to sort of give back to the community. Graduated in 2016 from ISB, so been a few discussions like this, and it's always nice to connect with the student community and cover as many questions. So with respect to myself, so I head growth at Polygon. There are a few other functions also I sort of roll up to me. But if I were to just talk about myself, and then I can maybe talk a bit more about what we're doing at Polygon. So my blockchain journey started back in 2017. It was actually about May of 2016 when I first read about Bitcoin and about decentralization as a concept, right? Like how decentralization works, and how you could potentially take some of the problems which you're solving in this world in a centralized manner, but we could solve it better and more transparently with the decentralized technology. And this is kind of what I really got obsessed about. And then I started going down the rabbit hole of the cryptocurrencies and private blockchains and all of that. I started, started doing a fair bit of technical work myself. I started coding smart contracts and sort of just went through that entire process. And somewhere along the way, I decided I was so fascinated by this idea that I decided that, I have to build a career in this space. Like nothing else seemed to, be as exciting as this. It was, of course, a time when, I think the technology was just coming into its limelight. There were not as many explainer videos. In fact, there were very few blogs as well, which really explain the concept well. But sort of this is kind of where my journey started, and sort of I just kept in touch with the space, and then the folks at Polygon reached out to me to head the growth function. So this is kind of what's been my journey. To talk about a bit about Polygon. So we're a made in India product. We're a blockchain a company, and we've created our own blockchain. And the purpose we aim to solve is blockchain scalability. So what we kind of realized, so the company was started in 2017. We used to call ourselves Matic Network at the time, and our token is still called Matic. But what we kind of realized back in 2017 was that, I think if some of you are into crypto, you would remember in 2017 that there was this game called Crypto Kitties. It was a very interesting cat breeding game, which went live on Ethereum, and the game was so popular that it ended up clogging the entire Ethereum network, right? Which is when people ask questions that, this is supposed to be some world-changing technology, and a cat game has wrecked this entire infrastructure. Like, how is it supposed to solve anything or sort of change the world, like how people talk about it? So that's when the first conversations around, the serious conversations around scalability started. That, blockchain technology, decentralized, all of that is great, but if it's not scalable, then it will not be able to achieve, sort of achieve its mission. So this is when Matic Network was started as a way to scale blockchain technology. We studied all the different blockchains out there, and we kind of felt that Ethereum is the best sort of ecosystem out there. It has the most network effects. It's got a very good roadmap, and at the same time, it's very decentralized in the way it operates. Right, there's this sort of if you have, if the listeners also have time, I greatly encourage you to read into Ethereum's philosophy, which is around the theory of subtraction, and how they aim to scale the system, scale the blockchain ecosystem. So we found that, very interesting, and we felt, okay, you know what, we should take Ethereum as the base layer, and then we should create like another blockchain. So this is Ethereum, like create another blockchain on top of that, which sort of addresses the scalability problem. So this is back in 2017. It's now, of course, it's been pretty crazy ride for us last 4-5 years, and right to today. So what also happened during the way is, how technology works, right? The march of technology is constant. The thinking around how scalability has to be solved. So back in 2017, the thinking was using plasma technology. This is based on a white paper written by Vitalik Buterin at the time, that plasma technology can be used to scale Ethereum. But today, like, there are so many other new ways, like optimistic rollups, ZK rollups. So what we're trying to do at Polygon is to create this aggregator for all types of Ethereum scaling solutions. So when I talk about optimistic rollups, ZK rollups, all of these actually represent different blockchains. So a ZK rollup blockchain, an optimistic rollup blockchain. We currently have our own sort of blockchain, which is a hybrid plasma proof of stake chain. So all of these are different blockchains, and we want to create this one layer of which sort of aggregates all of these different scaling solutions, and thereby creating like sort of this one-stop shop where a developer can come create any kind of application he or she wants to create, and have the maximum flexibility in terms of technology. And so as an infrastructure provider, like our job is to put all the options on the table, and then the developer decides which is the best sort of scaling solution, or what kind of technology he or she wants to use. So this is kind of how we've structured, and all of this will be governed by just one token. So we're building the infrastructure for that. And yeah, so this is kind of what we're doing at Polygon, and this is kind of why, interesting story, this is kind of why we changed the name from Matic to Polygon, because if you think about Polygon in a mathematical sense, it's a n-sided figure which can fit any shape or size, and this is kind of what we want to be, right? This sort of layer which can solve everything. So it's a bit geeky, but we love it. So this is kind of why we named ourselves Polygon. So yeah, so fast forward to today, our mainnet went live last year. We have, as of today, we have over 500 applications. In fact, I think it's close to 1,000 now applications live on our platform. We are by far the most adopted blockchain out there. We're valued today at about close to about, I think, about $14 billion. We were amongst, I would say we were the first blockchain project out of India, which is listed on Coinbase. We're fast becoming possibly one of the largest ecosystems out there, and it's a very proud moment for us to, we all come from such humble backgrounds here, including the founders, myself, and to be able to, be where we are today is nothing short of a dream. And of course, all of this has been possible because of a lot of hard work, but also the love of the community, which has been with us every step of the way. So this is, just a quick brief about Polygon. And also, if I were to just take maybe 10, 15 seconds and just talk about our technology. So like I said, we're an extension of Ethereum. So what we've done is we've inherited some of the best aspects of Ethereum, which is Ethereum virtual machine, right? So EVM compatibility. So anything which works on Ethereum works on Polygon. Our block times are 2 seconds. So any transaction is final in 2 seconds, right? So just imagine if you click something and a transaction, something happens in 2 seconds, like similar to what might happen on a mobile phone. And also the average cost of a transaction on Polygon is something like on average $0.00004. So it's practically free. I mean, if I were to maybe term that number differently, for $10, which would be what, 700, 800 rupees, you can do close to 2 million transactions. And when you bring this kind of very high speed and this combination, right, this magic combination of high speed and low cost, that's kind of when the magic happens, right? That's when when you can take you can give the user what we call like a Web 2 kind of experience, but in a Web 3 environment, which is what we call in blockchain parlance, this is Web 3, second coming of the internet, as some might say. So this is kind of what we wanted to do. We wanted to enable people to take the same experience which they have on their mobile phones on the internet and sort of translate that into the blockchain verse, so that when users start using it, they feel that it's the same way, and they have that trust and that confidence in blockchain technology. So yeah, so this is about just a quick sort of maybe longish introduction about Polygon. And of course, we can take any questions later in the session.
Sure. Thank you so much, Arjun. That was a very interesting story. And now can I come to Akand, who will also be moderating our panel discussion. So Akand, can you please start a little bit with your journey and
thank you so much, Archana, for organizing this particular crypto session. It's an amazing panel to be in. Congratulations to Polygon for acquiring Hermes, Arjun. That's an amazing news. And Minal, congratulations to CoinDCX for becoming India's first crypto exchange. That's amazing news as well. So it's all newsworthy events are happening in the crypto space. The industry itself is going mainstream. A bit about myself. I graduated way back in 2013. After that, I joined the government of India with this organization called the Intelligence Bureau. So it's a law enforcement agency. I was an assistant central intelligence officer. I was posted with the cyber cell division of the organization. Our main task was to perform dark web monitoring, lawful interception, social media analysis, etc. So way back in 2015-16, I was just doing our dark web monitoring, where most of these online drugs or weapons, AK-47s, etc., were being bought by using cryptocurrencies, by Bitcoin. So I was from the regulator, from the law enforcement point of view, we saw it as something, an anonymous kind of payment cash system that we wanted to stop. So I started reading more about on that. As Arjun says, that I started falling into the rabbit hole. I understood the potential of this technology, potential of the blockchain technology, not just Bitcoin, but Ethereum, but every other blockchains that are over there. 3-4 years, we started working on how do we exactly trace the entire flow of funds, etc. Since it's an open, decentralized ledger, it was immutable. So you could see all the transactions on the blockchain. A very interesting phenomenon. After that, I came back to the private sector. I did my MBA from the Indian School of Business. Currently, I'm leading the business strategy team of TRM Labs. It's a San Francisco-based blockchain analytics company. We are into the same thing that I've been doing: cryptocurrency-based investigations, tracing, monitoring. For crypto exchanges, it is used for risk management, compliance, etc. So TRM Labs is based out of San Francisco. I currently am leading their Asia, Africa, European regions. Some of the world's largest exchanges, Binance, India's largest exchange, WazirX, PayPal, Visa, etc., use TRM Labs to perform their crypto compliance. So they just want to ensure that any incoming crypto or any outgoing crypto or the crypto in their ecosystem is clean. It is not. It doesn't come from any illegal sources. It doesn't come from any illicit transactions. So basically, we're trying to de-anonymize the entire blockchains to understand that only clean activities happen on the blockchain, so that the entire industry can scale up much faster. Because when the entire ecosystem is safe, it's clean and secure, that is when the regulators also will be comfortable with bringing good regulations. From that perspective, we have given almost these cryptocurrency-based investigations trainings to almost 22 different law enforcement agencies in the country, including Enforcement Directorate, Director of Revenue Intelligence, Intelligence Bureau, CBI, the Indian Cybercrime Coordination Center, etc. So slowly, these guys are understanding the benefits of blockchain, the benefits of cryptocurrencies, and how they can use these tools to ensure that nothing illegal happens in the space. And particularly, I love this particular panel. We have blockchain in trade finance. We have Ethereum scalability solutions, layer 2 networks. We have crypto adoption and centralized exchanges. And we have blockchain analytics and crypto compliance in the panel. It's going to be an amazing panel discussion. Thank you, Archana. So while folks were registering for this particular panel, we asked them to ask any good questions if they had, and they brought in some beautiful questions. So I'll also be moderating this particular session. We'll start with Raj. Raj, Tanushri Shukla from ISB class of 22 asked a really good question. So she says that right now for international trade finance, for international cross-border finance, you use the SWIFT ecosystem, SWIFT, SWIFT messaging. So you're saying blockchain can be used in trade finance also. So are you saying that can blockchain end up in SWIFT messaging for fund transfers? If yes, how is it possible? If no, what is the use? A bit on about that, please.
Sure. I think SWIFT has been around for a while, and it started out as a collective of banks essentially creating an interoperating system for moving funds from point to point across the world. But fundamentally, the challenge is when you are moving funds, say from India to Rwanda, Zimbabwe, legitimate trade destinations. The time taken for SWIFT messaging to allow you to debit and credit the funds to the respective parties is significant, right? And I think this is where blockchain technology comes in with the use of crypto. And with the emerging presence of CBDCs, digital currencies. A classic example of this is what the Polygon founder has actually done with the Crypto Relief Network for supporting COVID operations in India, right? Within a week, they were able to put together the whole platform together with the accounting, the tax angle, setting up a bank account in the UAE, essentially getting crypto in multiple different wallets, primarily Ether and Bitcoin, but then converting it to stable coin and obviously US dollar, currency of choice, and then moving it into various different NGOs in India to support COVID relief. Now, if you use the same principle, if you have digital currencies, right? Whether it's the US, actually right now it's China that's driving it. So and the rest of the world is trying to respond to global trade pools, right? If you have a digital currency and use that for financing trade, you're essentially disintermediating a lot of wholesale commercial banking the way it is today, right? You will have coins. You'll be able to get wallets, originating from the central bank, and you'll use that to facilitate trade. So in that case, with blockchain, the need for something like SWIFT messaging really goes away in the long run.
Yeah, that makes a lot of sense. I hope that answers the question, Tanushree. Minal, there's a really interesting question from Shubham Jain over here. So we know that the RBI had, banned cryptocurrencies way back in 2017-18, and the Supreme Court judgment try to revoke that. So since then, you've been in the space for a long time. How has the growth in cryptocurrencies since the Supreme Court's decision grown? As in, do you have some numbers, or what do you think on that?
Sure. Yeah, that's a very interesting one, and I would love to sort of talk about it because I have sort of experienced the entire growth for the last few years firsthand, right? So I mean, of course, all of us know that the last year the Supreme Court judgment that came out was sort of a very positive move in terms of the way regulators are looking at the asset class moving forward. What I believe is the Supreme Court judgment last year was a very significant day in the history of sort of crypto in India, because it sort of really turned tides in terms of a lot of adoption as compared to a lot of brain drain, a lot of people moving out, right? A lot of people believing that the technology and the asset class is sort of more illegal, I would say. That belief sort of was sort of washed off, and since then I think it's been a roller coaster ride, right? Of course, growth is sort of a very broad used term, but I would like to sort of talk about growth in terms of investment, the kind of trading we have been seeing, and the kind of user growth we have been seeing, which is where I have sort of two pieces to share here. So one is, this is sort of more the entire Indian exchange data, or in the entire Indian global ecosystem data specific to crypto, where we have seen that some industry estimates mention that crypto trading has sort of grown by nearly 400 to 500% within the last 1 year to maybe the last 5 quarters or so, which if you think about it is huge, right? And on similar lines, if we think about the total investments that Indians have done into the crypto as an asset class, which was, let's say, hovering around 900 million to a billion in April 20. A few estimates sort of talk about that reaching around $7 billion as we sort of talk about the adoption today. So I think that itself talks about huge growth in terms of the interest which is growing big time in India. And I think, of course, these are estimates, right? Hence the second data point, which is more specific to our CoinDCX growth journey, which is sort of the real data which I see on a day-to-day basis, and hence I can sort of very clearly and objectively talk about it. So today we are sitting at around a user base of around 3.5 million, approaching 4 million users. These are people who have at least tried crypto at least once on the platform, and this is sort of around a 10 to 12x growth that we have seen within the last 1 year, right? I mean, if you think about 3.5 to 4 million, it might not look like a big figure in itself, but if you think about it, if we continue to grow at the same rate, we will beat Zerodha in a few quarters, right? So that's sort of a few data points I would like to share, and I think the growth has been among us. There has been a lot of interest, and this is happening while we do not have the regulations, right? Once potentially moving forward, if the regulators potentially look at crypto as a legitimate asset class, recognize that as one of the asset classes within the purview of various regulators, I think crypto has a bright future in India moving forward as well.
Absolutely, that makes a lot of sense. Also, people have access to smartphones, people have access to internet, people have access to disposable income. So yeah, the growth that we are seeing actually, because of your points, it does make a lot of sense. We have a question from Dave in the chat box, which is very interesting. Also, guys, folks, if you have any questions, any questions to any of the panelists, please put them on the chat box. We would love to answer them over the next 30, 40 minutes, not an issue. So Arjun, this question is to you. Dave asks, does the POS and sharding coming to Ethereum blockchain natively become a competition for you? Because they help in scalability, of course. Is there a plan to make Polygon a cross-chain network in the future? Any thoughts on that?
Sure. Let me cover that. So very interesting question. So if I were to talk about ETH 2.0, right? So a few observations before we get into that question. So the ETH 2.0 roadmap has changed quite a bit from its initial when it was first laid out by Vitalik. I think it was about 18 months ago. When the discussion was that there will be 1024 shards, and then there would be very high transaction throughput. That number has now come down to 64 shards. And sharding, of course, solving that at scale is an extremely difficult problem when you have to sort of ensure a very sort of concurrency in all of your nodes and all of the different shards, and ensure security as well, especially in proof of stake network. So that's something very difficult to do. But if I were to answer the question this way, that let's look at what ETH 2.0 has promised, right? So they've said that it will do 100,000 transactions per second. Now, let's assume a blockchain future where you have millions of users using blockchain, right? So a good way of imagining something like this is look at the number of users Android has or iOS has, millions of users. Now, millions of users doing thousands of transactions a day. And if you have to imagine, like, how do you do thousands of transactions a day? Like, just imagine the number of times you tap your phone, right? The number of times you use, like, you just open your phone, check Facebook, click like, or Instagram, Twitter. Just imagine like the number of times you do that in a day. Each user, and of course, this is only going to increase with time. So millions of users doing hundreds of thousands of transactions per day, ETH 2.0 will not be able to provide that kind of scalability, even with 100,000 transactions per second. And mathematically, you can calculate it. It's not going to be possible. So, which is why even when Vitalik talks about ETH 2.0, he always talks about, sort of a layer 2 on top of ETH 2.0 for scalability, right? So, of late, there's been a lot of discussion around rollups, about using optimistic rollups, CK rollups to provide that additional layer of scalability. So how I think the future is going to be is that you will always have Ethereum, which is like sort of, you could say, the settlement layer, which of course, if it's high performance, it's great. So and then there will always be this scalability layer on top of that, which will sort of provide that scalability you need. When you start, for example, start playing games, or start doing finance, or start doing social media on blockchain. Like now, even Facebook has committed that they're going to be a metaverse company in the future. So this is why, like, I feel that this is not competition at all. In fact, if the base layer becomes faster and more performant, then it's better for the layers on top as well. So this is as far as ETH 2.0 is concerned. Now, being multi-chain, I would say that we are committed to Ethereum, right? So we feel that Ethereum is the best ecosystem out there, and we want to extend Ethereum, right? So how I would say is, like, if I would say it like a mission statement, like, we want to bring the world to Ethereum. So I think during our inception, we had thought about this, that should we become like a generalized scaling layer for all different types of blockchains, like, like EOS or whatever have you, like all the different blockchains out there. But when we studied all the different blockchains, the technologies, and also more importantly, the philosophy of those blockchains and those ecosystems, you kind of realize that Ethereum is hands down the most decentralized and sort of the best ecosystem out there. So which is why, from a long-term, let's say, perspective, we've decided that this is how we want it to be. And we will continue to sort of mirror Ethereum and continue to sort of build technology which extends the Ethereum ecosystem. So our long-term plan, actually, if I were to talk about our goal is to be number 3, is sort of the third most used blockchain out there. So number 1, we expect it to be Bitcoin. Number 2 will be Ethereum, and our objective actually is to come in at number 3, which is post Ethereum, and then we become the execution layer. So it's something like that. So yeah, I hope that answers the question.
Yeah, of course, that makes a lot of sense. Basically, layer 2 networks are becoming the in thing, and I see the third most used blockchain is a very valid goal to have, and it is totally achievable. That is not a problem at all. Dave has another question, this time to me. I'm always curious as to why Monero, with the strong protection it offers, is not more popular with the dark web groups. Why does Bitcoin still remain the dominant ransom or currency? Any insights? Beautiful question, Dave. Just for the other folks to understand what Monero is, Monero is a privacy-enabled blockchain which tries to mask both the transactions and the addresses. They use this new technology called ring signatures to ensure that nobody are able to access the transaction data or any kind of blockchain data. Now, coming to the actual question. Why is Monero not as famous as Bitcoin to perform illicit transactions? The first one is the off-ramp and on-ramp from fiat to crypto to fiat becomes very important. If I need to buy drugs or weapons or to do something in the real world, I would want to shift to convert Bitcoin or any other blockchain to, say, INR, USD, Yen, Yuan, etc. through an exchange. It could be a centralized exchange, it could be a decentralized exchange. And by default, all the exchanges, all the crypto on ramps and off ramps have taken up an approach to not support Monero because of this particular reason. Because we know that Monero is cannot be de-anonymized. We don't know, we can't trace the transactions on Monero. So when I don't have liquidity in the real world, I will not use that particular blockchain, even though it has privacy enabled features. Because I have 1,000 Monero and nobody's accepting it. There's CoinDCX won't accept it, WazirX won't accept it, Binance won't accept it. There's no point of it. So I would rather use Bitcoin, maybe have a self-hosted node, or use another new wallet every single time to convert my Bitcoin to fiat currency to do my real world transactions, than use Monero, even if it's superior technologically. Because of low liquidity, that still becomes a big issue. I hope that answers the question, Dave. Thank you so much for that. That's a beautiful question. Raj, there's one more question to you from Vijay Kiran from Broadridge. Interesting question. How would the introduction of CBDCs, central bank digital currencies, eventually impact the BFSI sector, banking and financial service industry sector, and its customers? Since you're from the financial sector, this actually makes a lot of sense. Please go ahead.
That's a really interesting question. Right now, mainland China is running their experiments around this in the crypto world. They have fundamentally created separate coins for the retail space versus the commercial banking space. So one imagines that there will be some kind of protocol in place that they will have if you are an individual consumer of the crypto coin, with a choice of wallets that you can get or have access to from the regulatory authority, while the traditional banks who offer this working capital financing for trades, for loans, for mortgages, what have you, will have a separate access that will be coming from the regulator themselves. So I think it's going to be interesting to see how this is going to play out. I think some part of the banking world is actually is being disintermediated, as you're well aware of. Clearly in the retail space, if you look at when it comes to cards, I mean, between Apple Pay, Google Pay, I have no idea what's happened to Facebook's Libra, or whatever it's called these days, and the various different options available for the ordinary consumer. Who uses cards anymore, right? So if you're seeing that in retail banking, can you imagine that happening in the wholesale banking space? If I can access my funds through a central authority purely for the sake of business transactions, why would I go to specifically a bank unless there's some kind of a provision made where the central banker allocates some amount of coins to the banker specifically for the sake of carrying out such a business? But it's an interesting thing. I don't think we have an answer yet, but I think this is how it's going to play out based on what the Chinese are doing right now.
Very interesting. Very interesting. We'll shift gears a bit. We've talked about analytics, layer 2, and trade finance. Minal, I want to talk about a bit on crypto adoption in India. So you guys have started this Bitcoin Liya Kya campaign, which has been massively successful. Can you give us some numbers or some kind of impact that particular campaign had in terms of crypto adoption in the country? And yeah, go ahead.
Sure. So yeah, again, I would love to sort of talk about it because Bitcoin Liya Kya, or the BLK campaign, as we sort of talk about it internally within the team, is something very close to us. We sort of we had sort of endless sleepless nights to sort of go through the entire planning and sort of eventually get into the kind of execution we were able to get to. So quite grateful about that. So I think in terms of the philosophy, right, the way we think about sort of cryptocurrency adoption or growth at CoinDCX, it just not limited to our business, right? We really feel that we are in an industry wherein we are not just sort of driving adoption for our business, but also driving the adoption of the entire cryptocurrency as a whole, right? Which is where we do a lot of educational initiatives like DCX Learn, etc., so that we can make the sort of a normal Indian understand more about crypto, and sort of start considering that as a viable investment option. So yeah, I think the entire BLK campaign was quite a significant one for us, wherein again, one of the reasons we chose Bitcoin is, of course, it happens to be the most famous cryptocurrency, and with all the data we have, I mean, it is very clear to us that most of the Indians sort of start their crypto investment journey with Bitcoin. And that's where we thought, Bitcoin will sort of resonate very well with everybody. And we wanted to sort of create something very simple and enticing, right, at the same time. And lo and behold, we sort of, got a lot of appreciation and a lot of reach with this campaign, wherein, across all OTTs, across, all our various channels, influencers we work with, we have been able to reach to millions of views, and I think this was sort of a very significant or a giant step, as I said, in sort of moving towards making crypto a household name, right? Because that's what we sort of think about, and it's just not about our users, it's also about educating the retail India, the HNI India, the regulators, right? And sort of trying to connect and sort of make content which is more relatable and simpler for them to understand. And which is where I think Bitcoin Liya Kya was just one of the campaigns, a giant step, as I said, towards that. And we'll be sort of for sure planning a lot of similar campaigns as we move forward.
Interesting. Arjun, I have a question from Manoj to you. So we talked about Ethereum scaling solutions, Ethereum layer 2 networks. He wants to know about Bitcoin layer 2 networks, such as the Lightning network, etc. Do you have any thoughts on that, its growth, its comparison to Polygon and Lightning network, etc.? Please go ahead.
Sure thing. So Lightning was a very, very interesting kind of development in itself, right? So I think early on people realized that, Bitcoin again had scalability issues, and there wasn't a robust smart contracting system. The scripting which Bitcoin has natively is sort of does not allow for, let's say, complex designing complex business logic. So for example, if you want to set up all the common stuff which you see on Ethereum, all the staking and all of that, and you simply can't do any of that stuff. So Lightning was like one of the ways in which people thought, that we need to focus on, try to solve for Bitcoin scalability. Lightning is one of the solutions, by the way. There are a bunch of other scalability layers who are trying to solve for Bitcoin scalability, and I encourage you to look into that. So of course, this is great, right? It extends the Bitcoin ecosystem, and that's good for Bitcoin. But again, what we've kind of realized over a period of time, and this is kind of why Ethereum over a period of time, its growth has been, has been far beyond what Bitcoin's growth has been, is because, if you do not build sort of a technology from the grounds up, which is designed not as a payment system, but as a system which has to solve for business logic, you are not going to be able to sort of create like what if I were to say a blockchain future, right? So to translate like the stuff which Raj was talking about, right? If you want to translate that, like into business logic, like for example, you want to solve Swift, or if you want to do any of those kind of things, you need to be able to like program, like you need the blockchain has to be programmable, and this is kind of where Ethereum really wins out. That Ethereum is highly programmable. The Ethereum virtual machine allows you to do lots of interesting things. At the same time, the scripting on the Ethereum virtual machine, which is in Solidity, is very similar to Java, so it's not difficult to learn either. So this is kind of what I feel is sort of my thoughts on Bitcoin scalability, and it's obviously a welcome change. And if you look at when I was talking to the government of Honduras and a few other South American countries, like Bitcoin is very prevalent there, and people use the Lightning Network for payments. But beyond payments, is kind of where the problems start, and this is kind of why Ethereum is over a period of time becoming so much more popular. That because there is so much you can do, like you can like all of these NFTs which you're hearing about these days, right? All of that stuff is possible on Ethereum. You will not be able to do that on Bitcoin. So which is why like I think these attempts started. I remember reading about Lightning back in 2017. I was super excited as well. But like I said, the underlying infrastructure by itself was designed primarily around payments. It was not designed as a programmable sort of blockchain, which is why while people did try to scale it, they were not necessarily very successful at it. So it just became faster payments. It didn't really become, sort of a programmable blockchain. So yeah, so that's what I feel about that.
Makes a lot of sense. Cool. Shubham has an interesting question. Shubham from Singapore. The cryptocurrency net spend for the top 10 pure crypto exchanges in Singapore was fairly stable till Q4 2020, but has achieved a quote-unquote growth of 300 to 400% over the last two quarters of 2021. What are the major factors for this growth? Any regulatory changes, etc., specific to the Singapore market? Beautiful question, Shubham. I'll take that because I work with the regulators, etc. So yeah, it's a really interesting question because in the last 1-2 years, a lot of regulatory clarity has been coming up. In Singapore, the Monetary Authority of Singapore has brought in this thing called Payment Services Act, the PSA, which tries to give some kind of regulatory clarity in how an exchange needs to work. They would say that KYC should be done so that all your real world customers, identities, bank accounts, all the addresses, you know who you're dealing with. At the same time, KYT needs to be done, know your transactions, so that all the crypto transactions which are happening in a crypto exchange, whatever is coming in, whatever is going out, all the transactions within the ecosystem, everything, you know what it is. So the exchange basically knows whom they are dealing with and what crypto they're dealing with. Is that particular crypto coming from an illegal source? Is it coming from a legal source? Is it coming from a darknet market or from, say, money laundering, etc.? So those regulatory clarity, on top of which they also brought in this travel rule policy. So basically it says that which exchange, if some exchange sends money to the other exchange, they have to tell you who is sending the money as well. So basically you're trying to de-anonymize the transactions, de-anonymize the addresses, names, etc. So the normal investors who are usually risk averse, they have some kind of trust in the ecosystem because we know what we are dealing with. There are the scams, even if it happens, you can easily trace the entire thing. That's what we do at Yarn Labs, by the way. If there's some kind of illegal currency issues, you'll be able to see who's doing that particular thing. So the trust factor has increased a lot in the last 1-2 years. Singapore, because of Payment Services Act, the USA, because of the FinCEN, OFAC rules have changed a lot. In the UK, with the FCA rules which are coming up. In India, we're always 1-2 years behind the Western countries. Shouldn't say that, but the regulatory challenges are being overcome. The government of India thought of banning Bitcoin, but the entire uproar from the crypto industry ensured that they will put a stop on that. They would want to study what exactly this industry is, and then they would want to regulate it. Regulations are very simple. It is actually the industry will grow faster if regulations are there. Regulations is just that nothing illegal happens in the industry. If something illegal happens, you have measures to catch hold of that person. So do your KYC, do your KYT, ensure that you comply with travel rule, risk management, and compliance rules. You're good to go. So yes, that is one of the major factors for the rapid growth across the world. It's not just Singapore, it's India, it's US, it's the entire world. Because of which the price of Bitcoin, the price of all these altcoins, Ethereum has also exploded. If the price goes up, people tend to get into the madness as well. Thank you for that question, Shivam. We'll go to Raj. Varun Singhi says, my question for Raj. With so many internet IPOs coming out in India, when do you think digitized securities will gain traction in India? The security token offering market is estimated to be USD $9 trillion market and also helps SMEs to raise funds. Would love to hear your views, Raj, from Varun Singhi.
Yeah, hi Varun. I'm just responding to your question on chat. No problem. But we'll take it. I think India in this space will be more of a follower, if at all, right? And it will deliberately take its time. Just look at the way they've been acting in terms of the jurisdictional legality, in terms of the RBI's white papers, etc., and even having a sandbox. Compared to some of the other central banks that I have interacted with at fintech festivals in Singapore, the RBI is clearly way behind, right? So when it comes to such offerings, I think India is going to follow what the rest of the world does, and based on what major capital markets do, and institutional investors, jump in, which I'm sure they will. I think this will happen, but I would hold my breath on it anytime soon.
Cool. That makes a lot of sense. Guys, we are running out of time. We have like 5 to 6 minutes extra. There are a lot of questions. If it's okay with you guys, we can extend this by like 5-10 minutes if your time permits. Is that okay?
Yeah, works for me.
Cool. So a question to Minal from Shubham. So a bit of on the trading investment aspect of crypto. That's what most of the people are interested in. In terms of asset allocation, how much should a long-term investor put into crypto, and should it be through a basket of crypto? What are the risks going towards from an investment trading perspective?
Got it. So, I mean, again, this is sort of, my thought, not to be considered investment advice, but I broadly look at, crypto as not just as a currency, but as an asset class, right? And it has been, of course, seeing a lot of attraction because it is a heavily, high growing or sort of a heavily growing asset class, which has a high potential to provide good alphas. In terms of investment class, if you're thinking about making an investment decision, whether you would want to invest in cryptos or not, I essentially think of it in 3 mental models. The first one is you can essentially think of cryptocurrency as an exposure in your portfolio as an hedge against inflation, right? So all the currencies that you work with today, that you operate or that you sort of use as medium of exchange or even to store value, are sort of inflationary in their fundamental nature, as compared to a Bitcoin or a crypto, which is on the other side de-inflationary, right? By what I mean by that is essentially every year the amount of Bitcoin that are getting created is decreasing year by year, or every 4 years, as the block reward sort of decreases, as an example. So that's one. Second, the model I think about is, if you think about all the assets that you would potentially hold today, right? Real estate, equities, one way or the other, they can be controlled by centralized institutions, right? So it is sort of a hedge also against centralization when you talk about investing into cryptos, because it's an asset class, as we spoke about it, is fundamentally trustless in nature, and you are trusting the technology for that. And lastly, I think about sort of the last, important thing to note is, which sort of, can help me sort of elaborate a bit more on the thesis as to how can you think about it. It's because I still feel crypto is in the early days of, its adoption. Hence, there is a lot of speculation, a lot of projects promising a lot of things might not be delivering, right? So it is very important to fundamentally understand, every cryptocurrency that you invest into. And I always sort of put every cryptocurrency in a portfolio view in a high risk, high alpha bucket, right? So hence, it is good to start with a small allocation of, let's say, 1%, 2% of your portfolio. And within even that, even starting with just the likes of Bitcoin and Ethereum, right? I always advise my friends to start with 70% Bitcoin, 30% Ethereum as a starting point. And once you get comfortable with those couple of assets, right, you go into sort of diversifying your investment into more options, right? And go into more tokens beyond these legacy tokens like Bitcoin, Ethereum, right? Think of investing in fundamental blockchains like Matic solving a lot of problems. Think about investing into decentralized exchanges like Uniswap, solving again fundamental problems. So I think these are a few mental models that you can think about. But as a starting point, I always advise 1 to 2% of wealth exposure into crypto, and sort of maybe start with allocation and Bitcoin and Ethereum.
That's good advice, but it's not investment advice, as he himself said. Cool. There's one question that a lot of our folks, when they were registering, asked. So Arjun, I'll bring this question to you. This question is extremely important from a crypto adoption perspective, from a blockchain adoption perspective. Deepti asks, what are the top 3 technical and top non-technical skills in demand for blockchain, and how good are the job opportunities in the blockchain space? The reason I say this is important is because we need good talent in the industry for the entire industry to grow. So please do answer that.
Sure thing. So again, the crypto, it's basically still day zero, as one might say. Is a huge paucity of good talent out there. So in terms of technical skills, I think if you know smart contract programming. So what I've generally seen in my experience is that if you're a mean stack or a merge stack developer, you're pretty much 80% there, and then you just need to learn Solidity, which by itself is a pretty easy language. I don't know about easy, but I would say it's at least understanding and picking it up is not so difficult. Mastering any language, of course, takes time and effort, but yeah. So this is kind of on the technical side. You have smart contract programming. So this is like more backend development. There's a huge demand for front end developers. Like good front end talent is very difficult to find. Like people who are good at React or even Angular. So this is another big requirement. On the technical side, also there are sort of other requirements. So for example, people who understand, let's say, distributed systems, and this is a bit of a niche kind of a thing. So with the apps, with the applications out there, it's mostly front end and back end. But if you want to work in a protocol, then understanding things like Golang, understanding, for example, distributed systems, understanding distributed networks, even basic networking, erasure coding, like things like that. Like if you understand those, then you can maybe work in like a protocol company like ours, like kind of tech teams we hire in. And of course, if you have like let's say a mathematics background, then there's so much more going on even in roll-ups and then with zero knowledge technology. So there's a fair amount of opportunities there. This is like a little more on the technical side. On the non-technical side as well, I would say that there's a huge requirement there as well. So this has been mostly around people who can understand the business cases of how blockchain has to be used. More often than not, people who succeed in these kind of roles are people who usually come from technical backgrounds or are very conversant with technology. Right? So you may not necessarily need to have an engineering degree, but if you understand technology really well, if you have that kind of talent to be able to understand complex technology, then be able to build business cases for it. So for example, the kind of stuff which let's say Raj is doing, or for example, the kind of stuff what Minal is doing, right? Like coming up with those kind of marketing campaigns, understanding your audience. Like those are the kind of roles which are there in every technology field. So if you look at let's say non-technical roles in AI, the similar kind of roles you will have in blockchain. It's not really that different. It's just another technology. It has different use cases. It's useful in some cases, not so useful in other cases, and you have to understand that product market fit. And of course, blockchain by itself has a very unique culture, it's I would say it's actually counterculture, right? So people within blockchain, blockchain is trying to reinvent many traditional systems which have been prevalent in our in our economies for maybe many years, maybe sometimes even hundreds of years. And also this concept of decentralization by itself is a very, let's say, counter concept. We evolved as human beings from the times when we were apes to to having kings and governments and having a sense of centralized power, and suddenly now it's decentralized. Sometimes very difficult to wrap your head around how is this supposed to work or be successful. So yeah, so if you're that kind of person, who understands this culture, and to understand all of this, I would encourage you to be a part of these communities, be a part of DAOs, follow those Twitter channels, follow, like, go join those Discord servers, and start to understand the culture as well. And only then will you'll be really able to sort of understand why things are the way they are, how people think, how your audience thinks, like, and that's when you'll be truly effective in your job. So I think that full immersion, regardless of whether you're doing a technical or non-technical role, is something which I would really recommend. Yeah, so there's a huge positive talent, and I greatly encourage people to sort of start reading up, start figuring out if this is what you want to do. So with whatever role you can get your hands on, just dive in. This is going to be so much in the future, so best not to be picky at this point. So that's like how I feel.
Absolutely. Yeah, that's good advice, Arjun. I hope a lot of folks get inspired by this and get into the blockchain industry. We need a lot of talent in the industry. The industry is exploding. So yeah, please do find jobs in the blockchain industry. Try to make a shift, and we'll take this industry forward together. Satish Kashyap has a very interesting question. The extent of focus to de-anonymize crypto holdings is counter to one of its core tenets of anonymity. Are we heading into a world of extra regulatory power into this asset, which will make this controlled by major countries like US, China? That's a beautiful question. I'll speak from the law enforcement, from the regulatory perspective, and also from blockchain analytics perspective, because that's what we do. So when we, first and foremost, every blockchain is an open, decentralized ledger. That is, all the transactions are open to the public. It's open source. Anybody can access the data. Anybody can see that, okay, this address has sent so much Bitcoin to this address, and you can trace the entire flow of funds. So the anonymity part of it does not even apply to transactions, because transactions by default are open to anybody. Now, the addresses are anonymous, of course. So what we do is we don't try to find out to whom that particular address belongs to. We try to find out what kind of activity has that address tried to do. Did he try to launder some money? Did he or she try to buy drugs? Did they try to buy child pornography, child sexual abuse material? Some of these extremely disgusting, illegal stuff. If it happens on crypto or blockchain, the entire industry gets tainted. It's like people say that, okay, don't trust cryptocurrencies because there's been $1 billion scam or hack which has happened. So the entire point of regulations, law enforcement, is not to stifle the industry. It is actually to keep a check on the industry to ensure that the illegal activities don't happen, so that it will be useful for the rest of us. For 99.9% of the population, we use cryptocurrencies to either invest, trade, buy as a medium of exchange, to perform payments or some kind of legal good purposes. That 0.01% use it to perform scams, hacks, money laundering, terrorist financing, dark web transactions, etc. That 0.01% is what we need to focus on. That being said, when you de-anonymize, I will not know who that particular person is. I will just know that what actually that address has done. For law enforcement agencies, they have to go to an exchange such as say CoinDCX. They have to ask them, okay, this address has done some illegal activity. Can you give me the KYC details of this particular person? So CoinDCX will say that, okay, this person has laundered some money using my exchange. I will cooperate with the law enforcement agencies, give them the bank account address, Aadhaar card, passport address. So it's like that single person who did the illegal activity gets caught because of these regulations, not the rest of the 19.99% population. Tomorrow, if law enforcement agencies that give me KYC details of all the addresses, CoinDCX will just say, no, I won't. That is the power of de-anonymization. In a fiat currency, the issue is that the central bank prints the money, the central bank supplies the money. They are the ones who decide what is the how much money should be there in the country, and they regulate, they monitor. In a cryptocurrency, we take out the first 3-4 features from the central bank. We just let them monitor to ensure that the industry grows. I hope that answers the question. So guys, we're almost running out of time. If you have any last statements that you would like to make for the folks, or if you want to answer any particular questions, do go ahead. Can we start with Raj? Do you have any last statements to make?
Well, it's been a pleasure participating in this panel discussion, courtesy ISB, its Crypto Club, and the Alumni Association. And very interesting questions. I think just judging from some of the answers that I've been trying to give on chat is that it may seem, at least in the Indian context, it may seem that CBDCs and etc. are far off. But I do think that global forces will compel the Indian state, especially when it comes to trade and the balance of trade between countries. Major forces will compel India to respond in a way that it has to have an equivalent digital currency, and not by choice. And obviously that will come with appropriate regulatory frameworks. However, it will take time, and hopefully the sooner the better, because that's going to really impact both the retail consumer as well as those using CBDCs for global trade.
That sounds good. Minal?
Sure.
Any
Again,
last statements? Yeah.
A pleasure being here. I think, and I'm sort of very happy to sort of share my thoughts. I'm pretty excited about the future. The future in terms of where crypto can go, and what sort of a significant role India can play in the entire growth of it in the next 5 to 10 years. Today, we might be sitting at, let's say, 10 million people who have tried crypto. In like 5 years, 10 years from now, we might be talking about 100 million, 200 million, right? We are today one of the biggest internet user bases, with around 600 to 7 million internet users, right? So there is a huge potential. So I'm quite excited about that. And I think when I'm talking about adoption, it is not just in terms of investing and trading, right? I'm also talking about adoption of crypto in real use cases, right? Potentially by disrupting existing use cases or new use cases which we cannot imagine today. And I think the growth is also going to be not just within the retail space, but a lot of other segments like institutions, HNIs, right, are also going to look at crypto as a sort of a serious viable option, just as an investment class, and sort of use multiple MNCs will use blockchain in various capacities, very similar to how Raj had it initially, and sort of the likes of Polygon sort of working with TCS and likes, right? So I think across the space we will see a lot of adoption, and I'm super excited about the future. And would really recommend everybody sort of spend some time, understand about the industry, or at least sort of have a close look, because I might sound a little biased, but I do feel that the future is bright.
Arjun, that's very well put, Minal. Thank you.
No, sure thing. I'd just like to echo also what Minal said, and I think we're just at the cusp of what's of blockchain technology in general, right? Every single day there's some new innovation happening, there's some new way of using blockchain technology to solve a problem. So I greatly encourage people to look into it. Also, I dare say that there are many other use cases outside of cryptocurrency and trading. You can do a lot on blockchain technology. So I encourage people to also look on to maybe some of the other aspects, which would be maybe decentralized exchanges, right? What we call DEXs, and I encourage people to look into NFTs, right? Which are also going to be a revolution in itself. So there's like so typically when people make their journey is they have like no knowledge, then they have some knowledge, then it goes to trading, and then sort of goes into that sort of, that's when you sort of start going down the rabbit hole. So I encourage you to start your journey and sort of look into what's happening, not just at the crypto level or as an investment, but also as a technology, right? And what are the different ways it is being implemented, and what are different blockchains doing about it. So there's so much out there. So it's a good time to start, and of course there's a paucity of talent as well. So I hope that many of you sort of take some lessons from here and sort of start your sort of crypto careers and journeys, just like all of us on the call did, maybe just a few years ago. So yeah, so that's all I'd like to say. And of course, very happy to be here back, at these kind of sessions, and sort of give back in whatever small way I can to the community.
Absolutely, beautifully said, Arjun. So yeah, anybody, usually when people would want to start their crypto journey, they have some kind of fear that, okay, it is unregulated. There might be scams involved. There might be hacks involved. There's money laundering money. There is terrorist financing. There is, all these of illegal stuff happens, which is where, blockchain analytics comes in, which is where these regulations are coming in, which is the FATF, the Financial Action Task Force, is bringing really good regulations to ensure that the system is clean enough for all of us to reap the benefits out of it. As Arjun says, not just trading or investing, but also there are lots of use cases: decentralized finance, you have NFTs, you have DEXs, you have payments, medium of exchanges. The entire industry is being disrupted. To be honest, any industry which works on a middleman, which works on an intermediary-based industry, it could be e-commerce, it could be retail, it could be anything that is going to get disrupted by the blockchain industry. And there was an article saying that having some kind of skill set in blockchain space is going to be one of the biggest, skill sets in this decade and the next decade to come. So I ensure that the work that we at TRM Labs do is to ensure that we keep the system safe. The work at CoinDCX that they do is to ensure that the adoption of crypto keeps on increasing. The work that Polygon guys do is to scale up so that you accommodate the extra demand that blockchains have. And the work that Raj at DLT Ledgers used to do was about trade finance. How do you trade? How to use blockchains in international trade and finance, basically. So it's been an amazing panel discussion. I thank all the panel members who have come on on a Saturday evening. I understand that it's a weekend for you guys, but yeah, I completely I'm grateful to you guys. But because of time purposes, I want to stop this particular meeting right now, but the party hasn't stopped. If you guys have time, if the folks have time, we can get into a breakout session and keep discussing, because the audience seems to be extremely knowledgeable. These are some really good, stringent questions that they've asked, and I'm pretty sure that the discussions will keep happening. Thank you, Archana, for organizing this particular session. We officially
Thank you so much
up
for moderating the session and actually putting the entire thing together. So yes, like you were saying, what I'm going to do is I'm actually going to create some breakout rooms that people can probably join in and have their own sessions. So yes, thank you so much, and thanks to Arjun, Raj, and Minal as well for your time.
Thank you for having us.
Thank you. It's been a pleasure.
Take care.